Hello, traders. It's 8:02 a.m. Chicago time on Tuesday, the 23rd of October, 2018. Yet again, here we are, day in, day out, pretty much every day for the last, 4 or 5 years with these trader bites. Thanks for coming back if you're coming back, and thanks for joining us if you're new. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Risk off. That's the sentiment today. Very clearly, gold popping higher. Gold got as high as 1243 today, or up around $19 at the peak. Currently up $15.90 or $16, 1.31%. U.S. bonds are up a whole handle, plus 3 ticks, up 0.8%. Pretty aggressive. The yen is up 53 pips, and the 10-year is up 16 ticks. And then the only other products that are positive are the cable and the Bund versus yesterday's settlement in the futures. The laggard today is crude oil. Crude oil getting hit a little bit, $1.50 or down 2%, 2.12, 2.13%, trading near lows currently. Followed by the DAX. The DAX is off 228 points or 2%. The NASDAQ's down 1.8%, and so on. This morning, we got there are several, just a lot of stuff kind of being digested by the market right now. So it's just the big money is just going, okay, sideline, and moving to safety, to safer assets instead of participating in a drawdown. So this morning, 3M posted, and it came in at $2.58 versus $2.70, missing expectations and adjusting its forecast. To top that off, Caterpillar came in and beat by 3 cents. However, it adjusted its forecast. It's blaming the tariff situation for its outlook, and the slowdown in China, and so on and so forth. I mean, if you're not aware, China announced the slowest growth since the 2008 correction. So there's the market's obviously paying attention to that. There's also the issue with the EU and Brexit. The EU making some concessions to the UK in that they're willing to accept UK-wide customs. They're trying to get that behind them. And then there's also the EU situation with Italy and its budget. Italy has 3 weeks to respond to the EU. The EU is likely to reject what's been submitted or something like that. I keep trying to follow this thing, but there's too much going on. And of course, the White House is talking up a new tax cut, how timely, right before the elections, for the middle class of about 10%. That's basically using the deficit to fund an election. Really, many administrations do this, but we already had a tax cut that cost about $800 billion. So, for those of you who are fiscally conservative, we're not really seeing much conservative here, but I'm only interested in the economic aspect of that. It's further stimulus is what it is. So pay attention to that. That's what we have going on in the overnight. Today, we don't have any economic releases. Really, we have Richmond Fed, which is a low-tier number for October, expecting 24 at 10 o'clock Eastern. And we have a parade of central bank speakers, starting with the open. Well, BOE, Haldane, has already spoken at 6:30 Eastern. We got Fed Speaker Kashkari at 9:30, BOE's Carney at 11:20, Fed Speaker Bostic at 1:30, Eastern. Fed Speaker Kaplan at 2:15, and then this evening, Fed Speaker Evans at 6:15. That's what's on deck. Let's take a look at what we expected yesterday and compare it to what we got. Yesterday, I was looking for an attempt to push higher into the 27.88.89 area before we rotate down, and I was looking for a break lower with a target of 27.47 as the key. So I talked yesterday. If you didn't listen to that Trader Bite, you might want to. There's I shared basically I ran through again how I'm coming up with these conclusions, and I think it'd be helpful if you're trying to follow along. So we're looking for an impulse down, continuation with an extended target. The first target from yesterday was expected to be the 62 area. Then after that, the 56 area, the next stock zone, which we got bounces at each. As you can see here, I'm bouncing it a little bit, and then I expect it to slip down through into 2750. What we got was kind of what I had planned or I'd expected. However, it just could not go higher. Like it just dropped, pushed strong from the open, then dropped immediately to take out the 62 quarter, the 56. We got a little bounce at this 56, and then it rotated up, couldn't get past the open. We did not get the open test up to 80 and then break lower. It just broke lower. It just didn't it didn't give us that sweet chance of fading the move up unless you caught the move up into 80.50. It was quick to rotate down. And then from there, it was really noisy. Very, very noisy trade for the afternoon. Every time it tried to get below 56, it would get a quick pop higher. Every time it tried to get back into the range, it would get beat down a little bit. You could see a lot of bars that are inside of each other during the session. This is a 15-minute bar chart, and we never did extend into the 2750. We got to 2751, close enough. The target down below is pretty much hit, but overall, what we did yesterday is we continued the one-time framing down. Sellers are in control of the auction, and overall, once we made the move down and a test up, it was just sideways from there. A key characteristic of yesterday that was highly, highly unusual, very, very rare, that we do not break the overnight high or low, or at least touch the overnight high or low statistically, and not break the initial balance, the yellow lines, the initial balance high or the initial balance low. We did not breach those yesterday in addition to the overnight. There was like one instance of that in the last 2,500 days, trading days. So it's about 10 years of data. Very, very odd. We did have a very wide IB yesterday, about 29 points, 29 and a half points, which is unusually wide. But we, even with that wide an IB, generally we at least poke through one side or the other. And of course, we just could not touch the overnight. We had an inside session yesterday, despite this wide IB. We had an inside session yesterday to the overnight session. So that's where we ended up. We ended up actually with a very consolidated profile. I talked about the fact that we were balancing. We were balancing in the bigger picture, and we're likely to see a break down or up today, yesterday. And then I said yesterday, more likely today, we're likely to see the market go out of balance or switch into an imbalance mode. And we've definitely got that today with the gap down. There's no crystal ball. I mean, it just happens to work out today. But overall, what we're getting today is exactly what's expected, that we are likely to break out of this high kurtosis right here and challenge the extremes of this microcomposite that was created from the 11th till now. And here we are. Look at us. We're trading right against this low, right? The prior low was 27.12 and a quarter. The low was put in today by 8 ticks, 27.10 and a quarter. 27.10 and a quarter, and we're holding near 27.13 and a half. We are very methodical here in our approach. So yesterday would be considered a normal day, not a non-trend day, a normal day. All right, non-trend would have a small range and an unbroken IB. Standard range and an unbroken IB. We see those generally the day after Thanksgiving or prior to a holiday. So that's what we've got. Now that carries us over into the overnight. Here's the overnight. Very clear trend down, B-shaped profile. So long liquidation. Long live the liquidation. So we've got this beautiful channel down. We are just stair-stepping down. You could see us stair-stepping. The mid just keeps stepping down and down and down and down. And we just did not give any respect to yesterday's auction. We did not test the point of control that we left behind, not even in the overnight session. Very unusual. And we just ran away from it with the point of control near lows. The low seems to have a tail, small tail in it, very small. A very small volume before this gets a little boxy here on the profile. So overall, today is on the side of the sellers, and we are close to the century figure, 2,700 below. The inventory is almost 100% short in price and in delta. Maybe 99% short because we did this little fizzle right here, right at the open. So what do things look like from the perspective of the bigger picture? Ooh, that's an ugly chart, right? There's a lot going on that chart. So let's get rid of this channel. We built a new channel right up here. So we built a nice little channel down. We've got lower lows, one time framing down, and we're breaking lower. So what we have in the bigger picture is impulse down, pullback, and then today is the continuation. So this is kind of a flag with a continuation lower. So we're looking at 2,700 and beyond, just below here. Let's pull up our... So that's 2693 is the next low volume node down there. So this is an impulse, and what we have today is the continuation or expansion, whatever term you like to use in the bigger picture. We're below the 200 SMA. We're looking kind of bearish, but just remember, with this big a gap, in general, we've gapped through this key area that I talked about yesterday, this key high volume node for 2018. This is the most traded price in the area, 27 and a quarter. It's 9 points higher from here. This area represents a potential strong area of resistance on the first test today, potentially. Although MC or VPOCs tend to be a noisy area to trade. But on a day time frame level or perspective, I'm willing to take a chance there. If we don't, the big thing that I'm looking for today, let's bring this up and look at the current situation here. The big thing to look for today is how do we respond to the fact that we have this gap? That's really important to watch today. So I'm going to be very, very attentive to how the market responds. Now, what I would, this is going to be out of bounds, so we're likely to see some pretty strong swings today, expecting volatility to pick up, expecting wider rotations, expecting to cut my size in half or whatever, depending on how the rotations are at the very beginning. But today is a good day to wait for the action and look for continuation trades. So in general, I'm looking at a strong potential for an open test drive up, looking for a responsive buying spree where the mid area of this is somewhere around 2732, the 2732 stock zone, and then I'm looking for this to fail and start to turn back over and walk itself down into this 2700, 2704, 2700 area. Okay, so I'm looking for the continuation lower. This is the continuation of the impulse from 2 weeks ago, and I'm looking for it to try to balance out. Remember, if you're short, you might want to. A lot of participants may want to cover some of those shorts, causing some buying to take place. If that doesn't happen, if this doesn't happen at all, remember the Monty Hall problem. If this doesn't happen at all, if the market does not find any responders at all, I am looking short, and I'm looking short heavy. So I'm going to press hard to the short side. So if we get an immediate response higher, okay, grind up, and then it impulses down, and then it tries to make that high again, and it gets rejected, and it starts to move lower, I'm looking to trade the extension down, look for the next impulse, and just hang on tight. 2693 area is the next likely target. I expect the range to be in the 35 points today, potentially, and then I'm looking for it to push lower and stay down for the day. Okay. There's a lot going on with Saudi Arabia, the EU versus Brexit, the EU versus Italy, the election stuff that's going on. Saudi Arabia is very destabilizing for many industries. They're the world's largest consumer of weapons right now. This is why the current administration is trying to soothe Congress with what has happened to make sure that the $110 billion weapons purchase by Saudi does not get thrown out. The Germans have decided not to sell weapons. Russia's trying to move in. There's just a lot of stuff going on geopolitically. It's almost like a John Grisham type of thing going on. The third scenario is that we move lower. So we put in the low print. We get to 2,700. Poke through, and then we have an impulse up, which actually finishes strong. We're likely to end up with a gap zone anyway. We've been doing a poor job of filling gaps, but this may be the next scenario. If the market opens and runs down, control your FOMO. Control your fear of missing out. Don't chase it. Don't chase it. There will be many days like today. Many days. Look, it's rolling over. It just looks like the economy globally is rolling over. And so volatility is likely to pick up from here. The trading activity is likely to pick up from here. So just conserve your ammo. Make sure you don't give up your account on one or two trades. This is when it gets good, in my opinion, in my experience. I'm not an economic forecaster. I'm not an analyst, but it's just the writing's on the wall, So today is one of those days where you kind of, some days when it's totally dead, you have to temper your boredom response by looking for trades. I'm going to seek out trades. Today is likely the day that goes the opposite way, is likely to elicit the FOMO response. So it's likely to get you to overtrade. This is a great day for brokers, right? And so this is the day where you want to participate, where you don't want to miss out, where things look great, but volatility is high, most likely coming in. It's not likely to balance out here. There's just too much to price in, I believe. And so you're going to need to cut your size, or if you're trading one lots, you're going to need to be conservative with your shots. Okay. I've gone on long enough. Good luck today. There is a fourth scenario, but which is a test up trend down that blows right through 2,700 and just runs, just like we saw a couple weeks ago. But we'll respond to whatever the market gives us here. My highest recommendation currently is don't be that person who jumps in head first, right? Test the waters. So just watch closely. Watch, especially order flow. Watch closely for the first 20 minutes or so before you start forming an opinion. Do not come into the market with, oh my God, I'm going to sell the crap out of this because, Joe Garfunkel said that we're going to 2,600, so that's what I'm doing. That's not the way to survive trading, especially on a small account. Let the market tell you what it wants to do before you anticipate it. Good luck.